Web Technologies up for an impressive debut on the cards for July 27th coming in. IPO was subscribed by more than 90 times for this one. After stellar listing gains in Utkarsh, IdeaForge and Cyan DLM, investors are now expecting NetWeb Technologies to repeat the performance following an overwhelming response for all set of investors. Reports suggest a healthy listing gains to an extent of around 60% to its issue price of around 500 per share. But let's talk about more fundamentals. It's an action-packed day clearly for us. And to take us, to join us to take the discussion forward, we have Mayuresh Joshi, Head of Equity Research, William O'Neill, India. Good morning, Mayuresh. Crucial day when you're joining us. A, expiry. B, you're seeing Fed rate hikes finally coming through. Batch of most of the banking sector that has reported in their numbers, barring State Bank of India, in terms of the large sector banks. How are you looking at the markets? What is your suggestion to the viewers out there?
Morning, Nikki. Pleasure to be on your show as always.
Pleasure is all ours.
Two aspects. One, the Fed rate hike of 25 bips largely gestated at the commentary that Powell has probably given, that he probably look at data points in the September policy, whether to pause or probably have a 25 bips hike. A large part of what the bond markets are suggesting is that he might pause looking at the data points that have started coming through. So to that extent, I think most of the global markets are looking in very good shape at this point of time. On our own MarketSmith India methodology, we are confirming that the markets are in a confirmed uptrend. And therefore, I think the entire thesis that the markets expecting to do well might very well continue. You are absolutely right in terms of the earnings trajectory. A lot of earnings which have probably come through banking and financial space in general, whether it's the PSU banks, the private sector banks, or even NBFCs, have reported a very strong set of numbers. Metal counters have reported decent set of numbers as well, with expectations that next few quarters with input costs coming off should be even better in terms of their reported EBITDA and reported EBITDA per ton. Pharma companies have started showing a strong resilience. And to a certain extent, IT companies, where the earnings was expected to be soft and muted, most companies, barring Infosys, have given a reasonable amount of commentary as far as the second half is concerned. So all in all, I think earnings are looking up for the Indian market. US markets earnings are holding up, and the macro data points seem to point towards a very, very soft recession out there, with crude expected to stay in the range that we are thinking about because of weak Chinese demand, and Chinese demand expected to only pick up probably in the latter half of this financial year. The FPI flows will also continue into markets like India. So I think the going is good at this juncture. Valuations might be a little bit on the higher side, but our own take is that if you have a sector stock specific approach, I think there is still money to be made in this one.
Mayuresh, let's talk about Cipla. The stock is up by as much as 7% The numbers have been, of course, better than estimates. The margin guidance to 23 to 23.5%. US sales estimates have come in at $210 to $250 million as compared to 195, which was guided earlier. How are you looking at the pharma basket right now, and also Cipla for that matter? How are the valuations stacking up? Do you think the stock still offers a good entry point, or you think much of the rally is now done past for the counter?
So two aspects. One, I think the entire sector is probably looking like it's gearing up for a better earnings story, and Pandre, our institution software, is pointing out that pharma might be one of the better performing sectors in the best quarter probably as earnings start coming through in a more structurally optimistic fashion. Having said that, I think for the numbers that have probably come through, Cipla in particular that you asked, Nikki, the expectations in terms of EBITDA margin expansion was very, very muted. And what the company has probably delivered at 23.6% with a margin guidance which is up at this juncture is obviously a huge, huge positive. The second aspect is obviously Revlimid sales have helped both Cipla and Dr. Reddy's, and to a large extent to a lot of pharma companies as well. And that is reflecting in the US sales. They reported $222 million compared to $204 million on a quarter-on-quarter basis, which was a huge surprise as well. Indian market specifically, I think you're talking about the branded prescription, is holding up pretty well. And all these factors probably play good in terms of peptide injectables, as an example, expected to get launched, which is a high margin business in the US. To to prop up those margins. FDA concerns might start waning off as the more clearances start coming through, which means more niche drugs coming in the next few quarters, aiding to EPS growth. So yeah, I think Cipla has shown a very good EPS strength on MarketSmith India. And therefore, our belief is that this should be kept on your buy watch list. It can still be considered as fresh. Buy valuations are not too expensive at this juncture. In the broader markets, Dr. Reddy's stellar set of numbers again, expecting a lot of biosimilar launches, which is again a very, very high niche margin product. And a lot of their backward integration for almost 60-70% of their molecules is expected to be done in-house, which means that margin accretion can be very, very strong going forward as well. So yeah, anybody holding Dr. Reddy's, a stock like Zydus, which we have discussed on your show, should continue holding. Cipla probably looks like a good bet at this point of time. And the dark horse can also be something like a Sun Pharma. If it reports a better set of numbers, that stock can continue its momentum.
Sure, that's the word coming in. Sun Pharma could be the dark horse out there. But let's also talk about overall, what do you make out of the deal that has been just announced with terms of in terms of M&M picking up stake in RBL? A bit of you almost saw 10% uptick coming in for RBL Bank the last 5 consecutive sessions or thereabouts, and you're seeing M&M beaten down. Does that raise a corporate governance issue for you? It's a non-core investment, and the way M&M has come up with a clarification and not a, it's more of a, clarification rather than an announcement which has come in from the company. How are you looking at it? Strategically also, and, and along with that fundamentally. So 2 questions there essentially that I'd want to ask. M&M, do you see that as a good strategy? Do you see that in the favor of the shareholder? And B, corporate governance issue, if at all?
So to answer both your questions, Nikki, on the first part, really did not understand what was the logic in terms of having a stake built in a listed bank itself, and that through in the open market transaction itself. Again, it's not related to any of their businesses at this juncture. Their financial services arm, which is M&M Financials, is doing pretty well when it comes to the auto financing part of their side of the business. And therefore, from a capital allocation perspective, I think they've been very, very prudent so far. So I'm absolutely beleaguered on why this probably has happened at this juncture. And probably, I think a lot of questions will be raised. To answer your second question, whether this raises corporate governance issues, not really sure of this. What was the thought process in terms of the strategic inputs that the board has probably got? And what are they really looking at? Because if you want to really look at something of having a board seat in any listed entity, you need to at least have 10 to 12%. So are they serious in this business? Does this mean more capital allocation? Or was this just an investment of sorts that they have made, where I think a lot of question marks will be raised? And therefore, the kind of reaction that you're doing on those stocks, I think a lot of questions need to be answered by the M&M management related to this.
That's precisely where I guess most of the street confusion also lies, and you're seeing that stock being beaten down in blue completely with the way it's behaving right now. Losses to an extent of 5.5% coming in for Mahindra & Mahindra, as compared to some amount also for RBL Bank this time around, which is already in F&O category. Let's talk about AMCs and the banking business overall. Most of the AMC companies have also reported in their numbers. Read through for that. How are you looking at it and your outlook with regards to the performance? Aditya Birla was the latest of the lot who reported in the numbers. Read through for that, and overall for the banking sector, most team left to the rally or just playing out of the book right now?
No, so I'll answer the second question first, Nikki. I think for the banking sector, I think the numbers have been exceptionally good. So if you probably look at PSU's private banks, year-on-year performances were anyway expected to be stellar. But most banks have probably reported a stellar performance even on a quarter-on-quarter basis. Except the dip in NIMs that you probably have seen for Axis Bank, a lot of banks have reported stable NIMs. For the public sector universe, provision coverage universe has increased substantially, which probably means that the expected loan coverage is substantially covered onto their balance sheet. Deposit growths have been very, very good for the system as a whole. And with advances expected to pick up steam even more in the second half as the festive season comes through. My own sense is that this sector is probably gearing up in terms of having even a better performance. Yes, I think the Bank Nifty has moved up substantially. these stocks have moved up substantially. Is there more re-rating expected, both in terms of price earnings and price to book? Probably yes, and yes, the momentum might probably exist. So we remain a little bit more bullish in terms of the PSU banks at this juncture, because there is a little bit of more of valuation components and the re-rating aspects that we're seeing, and the EPSRS ratings on MarketSmith look favorable for the PSU universe. For the AMC pack as a whole, the sentimental reactions have got played out. And why I say sentimental is for two reasons. One, I think Geo BlackRock coming through obviously is a huge dent in terms of what can happen to business for the sector as a whole. But my own sense is that, and the reports that we are probably reading, if India has to go through a 6 trillion and over a period of time a 10 trillion over the next 15, 20 years, you look at the sheer number of households, Nikki, that will start coming out from the middle class pack to probably the higher middle class, the UHNBs as we call it as well. And therefore, there is an ample amount of scope and market opportunities over the next 5 to 10 years as India grows and the demographics grow even further in terms of, in fact, financial savings that can probably come through and financialization that can probably happen. So a dent in terms of the sentimental reaction, larger big picture, I think there is enough scope for a lot of these guys to keep on growing as India grows.
All right, Mayuresh, we're going to leave it at that. Thank you so much for taking out the time and speaking to us. Indeed, a pleasure having you with us.
Thank you so much. Pleasure's all mine.
All right. With this, it's a wrap, and goodbye from the entire team who puts this piece together for you.